Thank you, Mr. Chairman, and congratulations to you. Chairman Golden, members of this committee have expressed concern that CECL accounting standards will adversely impact the cost and availability of credit once fully implemented. We have heard banks of all sizes, and let me underscore, all sizes of banks outline the implications this new accounting standard will have on very popular consumer products, especially during economic downturns. Chairman Golden, after hearing concerns from both financial institutions and Congress, has FASB taken the time to study the likely economic impacts of CECL? And I'm not talking about Treasury. I'm talking about FASB.
We have not done an economic analysis.
Stunning. Did you study how CECL would affect lending or access to credit for consumers before issuing this new accounting standard?
We did a cost-benefit analysis in connection with our mission, which is to provide better, more decision-useful information to the capital markets and other users, including regulators.
Lending and access specifically is what I asked about.
No, we did not.
No, you did not. Again, stunning. I'd like to submit to the record the following article by Accounting Today, which estimates loan loss revenues, loan loss reserves under CECL. Again, Accounting Today, loan loss reserves under CECL could range from, are you ready for this? $50 billion to $100 billion, according to public disclosures made by various financial institutions. Chairman Golden, would you care to comment on this estimate of $50 billion to $100 billion?
We plan to closely monitor the progression of the CECL implementation to ensure that it's been performed with our expectations as to what is the actual.
So you don't study anything. Now you're just telling me you're going to closely monitor something like this? $50 billion to $100 billion? Wow, according to public disclosures on loan loss revenues?
We do study the impact of our proposals on the capital markets and other users. We think that the information provided to investors is consistent with how they analyze financial institutions. They'll be able to make more informed decisions that will help our capital markets, and we think that's a good thing. We also think the banking regulators will have better and more refined information, and they can make changes, and we think that is a good thing as well.
A new accounting standard that affects the economy this much should have significant studies backing it. Wouldn't you agree?
I think that's why it's important that we work with the Treasury in consultation with the banking regulators as they perform their.
But you haven't studied it at all, and we're talking about.
We have studied in connection with our mission that this will provide additional and better information to the capital market.
Chairman Golden, what percentage of institutions will be able to comply with CECL efficiently and effectively?
Based on our discussion with our stakeholders, those that are required to apply at the beginning, we believe are ready. We recently deferred the effective date for private financial institutions, not-for-profits, which includes all credit unions, and smaller public financial institutions, so they have 3 years.
What percentage of institutions will be able to comply with CECL efficiently and effectively? It's already, the date's passed. It's in.
We believe all those that are required to apply will be able to apply.
Chairman Golden, a number of commentators have suggested that CECL could have a pro-cyclical effect. Can you please describe what impact CECL would have in a recession?
There have been many studies that have been performed. Most recently, the Federal Reserve staff did a study that said leading up to the recession, it would dampen lending and it would accelerate lending during the recession, and therefore to be less pro-cyclical than the current model.
I couldn't disagree more. These new accounting standards will have, what it does to popular consumer products, especially during an economic downturn, products that matter to my constituents in Missouri's 2nd Congressional District, mortgages, credit cards. I'm just stunned. I have some questions about LIBOR and so forth, but I will leave it at that. You are compelled, I think, sir, to study this more further, take time about what is the impact this is going to be for real people and for the institutions and the small, especially sized banks that are going to be affected. I'm out of time, Mr. Chairman. I yield back.